Welcome to the Elysium Wealth Market Review and Outlook for December 2025. One of the world's leading hedge fund managers recently suggested shorting Nvidia, an unusual call given the company's blockbuster earnings. While it briefly unsettled markets, it was more a symptom than a cause. The real story remains liquidity. The recent U.S. government shutdown, the longest on record, temporarily disrupted liquidity, which is essential for market stability. During November, we also saw a broader slowdown in liquidity provision from both the U.S. and China. That backdrop is now improving. Around $10 trillion of U.S. debt must be rolled over in 2026, and liquidity will be critical. From 1st December, quantitative tightening ends, funds will gradually flow out of the Treasury general account, and increased Treasury bill issuance is expected to expand the U.S. money supply by roughly 8% in 2026. This is supportive for asset prices, though it also carries an inflationary impulse. Under a Trump-led Federal Reserve, strict inflation targeting may not be prioritized. We are also monitoring stress in U.S. regional banks. Delinquencies, particularly in auto loans, are rising, and Treasury officials have acknowledged that bank reserves are not yet ample. Despite this environment, U.S. equity markets showed resilience. November was volatile, but strong corporate earnings and expectations of a December rate cut drove a late rally. 83% of S&P 500 companies beat earnings expectations, while bond yields edged higher, reflecting fiscal concerns rather than weakening growth. In the UK, equities pulled back after October's highs. The FTSE 100 declined, though it remains strongly positive for the year. Public debt has reached roughly £3 trillion, leaving limited and increasingly difficult fiscal choices. European equities posted modest gains, supported by easing inflation and expectations of looser global monetary policy. Rising German debt is being directed toward infrastructure and defense, a more productive form of fiscal expansion. Seasonally, December tends to be supportive for markets, and any progress toward peace in Ukraine would be clearly positive. Japan experienced equity profit-taking, while bond yields moved to multi-decade highs following significant stimulus. China weakened as property sector challenges and renewed trade tensions weighed on sentiment. In summary, liquidity is returning, earnings remain strong, and markets are adjusting to higher debt and higher yields. Volatility will persist, but the broader investment backdrop remains constructive.